mining stock wealth. When it comes to mining stocks, precious metals, and cryptos, you need to go to Mining Stock Wealth. Mining Stock Wealth. Well, thank you all for joining. I'm Kerry Lutz, and my partner Bill Powers and I welcome you. Our company is Mining Stock Educators, and our purpose is to inform you of promising opportunities, among others, in the junior mining sector. And we're here today with Gold Terra Resource Corp, who just today released their latest drill results. Their phase 1 drill program has been a complete success, finding both high and low-grade gold on the Campbell Shear, along with continuity of mineralization in several gold-bearing zones. And phase 2 is set to begin in July. They're going to be covering a lot of that. There's a lot going on with the company that you should know about, and that's why we're getting together today. And you'll be hearing from John Fennick, who's president of Fennick Consulting, a noted money manager and sector specialist, works with investors and with companies to uncover value and opportunities. And then you will hear from Gerald Panneton, executive chairman of Gold Terra. For those of you not familiar with Gerald's near storybook career, Gerald, you have 30 years of experience around the globe. You played a key role in discovery and development of a number of significant gold deposits. Of course, you're founder of Detour Gold. The project grew from 1.5 million to over 16 million ounces of gold. Today ranks as one of the largest gold mines in Canada. And also with us is Dave Suda, president and CEO, and David's financial services professional with vast experience in capital markets, including sales, trading, investment banking, marketing, corporate strategy. You've been with Gold Terra since June of 2018, and before that, managing director at Beacon Securities, heading up the institutional trading desk, and perhaps of keynote is that you started out your career as a commodity trader. So without further ado, we're going to turn to you, John, and you'll be talking to us about the gold market, the opportunities that you see here. Again, welcome all. Thanks for being with us.
Thanks, Kerry. Appreciate it. And yeah, talking about the gold market in general right now, it's, June 4th saw a weekly close on gold over $1,900 an ounce, which we thought was pretty constructive. Obviously, you've got two major events coming up this week with the Fed on the 16th, and then GDX and GDXJ, the popular mining ETFs, rebalancing on Friday the 18th. So, in a week like this, we try to coach clients that you're going to see volatility, but you have to look at the long-term trend and what does that look like, right? So when you look at a chart of something like GLD, which represents the price of gold, there's many other options out there, but let's just use that as an example because it has a long track record. If you were to look at that chart going back, to the fall of 15, gold bottomed out in December of 15, and then the mining sector really bottomed out, we believe, in January of 16, about a month later. And you look at what's happened with the price of gold since that time, and you've made what we call a series of higher lows, meaning that the low kept increasing, in terms of price. And that's a very constructive technical chart in our view, and is really overlooked, I think, by the broad market, investor that's looking at, things like Bitcoin and hydrogen and lithium and all these different other opportunities just going bonkers. We look at gold as a very constructive portfolio insurance, if you will. When I worked at Sprott, Rick and the whole team always talked about gold as portfolio insurance. And right now, I would say with markets at all-time highs, literally as we're recording this, I looked at the Russell 2000 this morning. It's $2 off its all-time high. We have broader indexes like the S&P, NASDAQ, just pushing higher. It makes a lot of sense to have some type of insurance in your portfolio. We think gold and related stocks like Gold Terra make a lot of sense at these price levels. So, I think that's one takeaway, is that a lot of my peers, have been talking about a test on gold of 1560 to 1577 an ounce, and we were taking the other side of that trade in March and saying that is not going to happen, and here's why. If you look at what happened June 10th with the CPI read, and that is the inflation number, right? We saw a 5% rise in monthly inflation, which is the highest level that we've seen in 13 years. So, the Fed on Wednesday, I have no idea what Powell's going to say, but I would imagine he's going to say what he's been saying, which is inflation is transitory, this is transitory, that's transitory, and we disagree. We think inflation is here to stay, and that read may be one of the higher reads we see this year, but nonetheless, it's something to deal with, and that's another reason to own gold and anything related to gold. So, we're very bullish the price of gold, and we're bullish Gold Terra because we have a number of different screens that we use as portfolio managers, and one of them, one of the biggest screens that I use is, does a manager or a chairman or a geo have a history of success? And when you look at what Gerald's done, I mean, at Detour, it's very impressive. I mean, you have a stock here in the U.S. trading at 21 cents. I mean, this is price in August peaked at 41 cents, and so we see tremendous value in something like that. They came out with drill results again this morning that were positive, as Kerry pointed out. It's you've got a phase 2 program starting next month. This isn't like a long way away. And the company has a history of not, issuing warrants, which we think is very attractive. There's a very little overhang. And as we invest in juniors right now, that's been a problem. A lot of these companies cashed up last year or early this year, issued a full warrant, and now you're seeing a lot of selling in those names. We don't see that same issue with Gold Terra. So, we like the stock and continue to buy it at these levels. So, I'm happy to answer any questions for anyone in the Q&A, but I wanted to give Gerald the opportunity to talk, predominantly today, and happy to chime in later. So without further ado, Gerald.
Thank you very much, John. Thank you very much, everyone, for attending this webinar on Gold Terra. We're very happy to be able to talk, and just to reinforce John's what he's saying about the warrants. Gold Terra has issued warrants in the past before I showed up, and I think David understands very well what the warrants does to a company. It basically gives a ceiling, and there's a lot of money that can be raised. That's what they say, but sometimes it never does. And I believe in less dilution, and warrants is just adding dilution at the price set. And it's not a function that I've been able to, like when I did Detour Gold years ago, I was very proud of the structure that we put together. 40 million share at the beginning, no warrants, very little stock options. And that's what we care. For example, as a chairman, I don't have any stock options. And I believe in working for the company and buying share in the market like other investors, because I believe in the story. Now, going to Gold Terra, we have one of the best Canadian story. And I hope maybe, David, you can give me the thumbs up if my voice is coming okay. Perfect. I just want to make sure that everything is good. And so Gold Terra, and I joined only not even 2 years ago. It will be 2 years in October of this year, has quite of an impressive package. And maybe we can just move onto the land position just to go and give you an update on what we have. And what the company was able to do basically is build a package of, if you can go a bit back, you went quite fast on the slide. If you want me to talk in 2 minutes, I can do that. So just going back very briefly, where is Gold Terra assets? In Yellowknife. And why it is so important to be in Yellowknife? Well, you look at a 20,000 people town. You look at a former mining town with experience, with knowledge on the mining, with a road from Edmonton to Yellowknife. So we are not isolated. We don't have to fly in, fly out. And that's very important. I can tell you just a brief comparison. When I built Detour, I was always compared with Canadian Malartic. And I was remote. Canadian Malartic was not. And I can tell you that G&A and the cost of operating a mine, I had to have 2 more shifts than Canadian Malartic. Canadian Malartic maybe had 2 shifts working, and I had to have 5. Why is that? Because I was remote. I had to feed people. I have to lodge people. I have to transport them. So the cost of being away is tremendous. And when you have a chance to work in a town, in a city where everybody goes home at night, it's very, very important. And you can see here a large package accumulated over the years. But sometimes very difficult to focus. And for those shareholders that have been in the story for many, many years, the story was probably dragging because they found gold everywhere, but not with the focus that sometimes you need to be in a camp. Look, I'm a geologist. I've been in gold since 1981. I've been around, and my 12 years at Barrick was going to school. I thought I came out of school knowing a lot, but I can tell you, my 12 years at Barrick was the school I went to. And I cannot say thank you enough about that. And what I can say is that when you're in town, when you have 800 square kilometers and you have tons of gold showings, it doesn't mean you're going to have 100 mines, because there's a lot of sniff, there's a lot of smoke in a gold system. What you need to find is the gold plumbing, and that's exactly what was missing. So my first thing that I started to do, despite this wonderful 800 square kilometers package, was to get closer to the Con mine, to get on the Campbell Shear. The Campbell Shear is a plumbing system that has generated and produced 14 million ounces of gold over the years, up to about 2003 when the Con mine shut down. And when it shut down, in terms of low gold price, very similar to Placer Dome selling Detour Lake in 1998 when gold was 250, you lack the fact, but it doesn't mean that they ran out of gold or ran out of ore. It's just the gold price just shut down that camp, shut down this mine, as well as the legacy of Royal Oak was also a big negative. We're not on the giant mine, we're on the Con mine. The Con mine closed very well. Newmont purchased the property in 2008 from Yarmar for the Obebel project. Now, we decided to start negotiating immediately, and we were able to capture their attention and start negotiating with them. But it took 9 months to get an exploration deal on some of their claim, not the whole thing. Well, maybe you don't want to take the liability right away either, but it doesn't mean that it's not worth doing it. We just want to make sure that there's enough gold to pay to continue and take over this mine. And I think what's very, very important about the Campbell Shear, like I said, is what we're going to show you over the next couple of slides. What is a 5 million ounces deposit? So during the course of our first pass on the Newmont claim, we explored 2 kilometers of the Campbell Shear. And as you can see on the slide, we optioned in September 2020, and we drilled about 8,000 meters of drilling since then, our first pass. Over 2 kilometers of strike line, which we'll show you in a bit. We had some tremendous good results on one of the earlier zones that was fine by NERCO and probably Cominco before, of 11 gram over 5 meters and 14 gram over 5 meters. Those are our two best results of that 8,000 meters. And that's where we're going back. We're going back in that sector because that sector is already proving itself to be what can become a resource in the future. The Yellow Rex has already a strike length of 200 meters, has already been followed to 300 meters depth. And what we're going to need to do over the next months, from July to October, November, December, is drill 50 by 50 meters by 50 meters to expand the mineralization further. And the 50 meters is a reason is because the lands at the Con mine were small. They're not like one big piece of plywood, say like Boulay and Yulu, for example, where you can just drill the thing. No, they're separate lands. And sometimes you have big lands, sometimes you have small lands. But what's very important in our program in the winter, which we'd like to show you a bit further in the next slide, on the long section, this is the 2 kilometers. We're just south of where 5 million ounces of gold was produced. Look at the trend of that 5 million ounces and the Con Shear a little bit further. Then there's a block fault. So basically we're in the next block to the south, which has been explored in the past, which has outlined a lot of gold mineralization. And as you can see, the 2 kilometers that we tested basically carry the Campbell Shear with low grade and high grade mineralization. But what's very important is the Campbell Shear is there. What you need to do is more drilling, because drilling 2 kilometers every 200 meters give you an indication of where the Campbell shear is, where some of the mineralization is. And our compilation from the combine, and I can maybe move on the next slide, which will be the long section of our compilation. It's a big, large system. The Campbell shear can be 100 to 300 meters in width, but not necessarily mineralized all across. So what's important is to define the corridor and then focus on the ore lands that you found. But even if you have a gram over 10 meters, like we had in some of our result, or even this morning on our result, they're still positive. Why is that? Because there's gold, because the corridor is there, and we just need to drill more. And that's all we need to do. Just keep drilling every 50 meters. Now that our 200 meters has outlined the best area to drill, that's our next level. And these deposits, as you can see on the slide in front of your screen, goes, we used to say that in archaeogeology, goes forever and ever. So this mine, and what you see here is the footprint of a 5 million ounces deposit, which strike for about 1 kilometers of strike line to 1.5 kilometers of depth. That's how small a 5 million ounces could look like, with some big lens and some small lens, no question. Now, the deposit is cut off by a fault, the Pud fault. And there's a hole that we can look maybe at the next section, where I'd like to attend a more detailed section, is Y88. Y88 is the red balls that you can see approximately 1/3 to the bottom, where the arrow is being shown. This, actually, the fault is not on the left side of the Y88, it's more on the right side. So we know that the deposit had been cut off to the north, and the south block has moved a bit. And between the two faults of the Pud, we know that we can drill. And you can see that beside the yellow Rex, where there's maybe some ounces that you can build up as a resource, that the deposit is open between the red bulb and the deposit itself. Or maybe it's a different zone as well. But the potential between, say, surface to 1,000 meters vertical is tremendous to add ounces, high quality ounces, like our 2 drill hole we did on Yellow Rex, over 10 grams, 15 grams. The average grade of the con mine, Campbell shear, was 15 grams. So this is a high grade target that needs tighter drilling, 50 by 50, to develop very good high quality ounces right in the town of Yellowknife. And that's why we're so excited to go back. We just are planning our drill program that's going to be starting in July 12th. And our focus basically is on the Yellow Rex zone, where we had our best result. And we know that we can build on and create more value for our shareholders with the drill bit. Do not forget, already with the work from Gold Terra in the past, or Terra X Minerals, Joe Campbell and his team has been able to put together Crestaron deposit, which is approximately 250 to maybe 300,000 ounces, and the Samoto. We're already sitting at 1.2 million ounces in our book. But I think the Campbell share, whatever we find, and we don't necessarily need to find 5 million ounces to go in production. It could be 1 million to 2. And as you can see on the next slide, maybe you can go back one slide, David, please. You can see the Yellow Rex zone. So you can imagine that we already have very good continuity on 2 zones stacked against each other like this in the Campbell shear, dipping steeply. That just need to be follow up. We know that the hole below at 1,000 meters vertical, so we have a hole that is at 1,000 meters and a hole which is at about 400 meters. It's unexplored. And back then, most of the drilling that was done in the 70s, 80s, and 90s were very steep drilling to save cost, which basically sometimes did not have the perfect orientation. So we're drilling more like around 60-degree dip when we start our hole. We're very careful. We don't mind spending a bit more money, have a better true width on the zone, and it's just need to be drilled on a tighter spacing. And that's exactly what we're going to be doing. Hole 5 confirmed the whole zone is still open towards depth. We just need to drill it. And I can tell you some of our first holes will be 50 meters below hole 5. That's a sure thing. We figure that if we were to reach 500,000 ounces to 1.5 million, maybe 1 million ounces plus our 1.2 million ounces we have, we could be in business to complete eventually a feasibility study or a PFS to confirm those ounces and the value of it. At our current valuation of 21 cents US or 26 cents Canadian, I can tell you, I know we don't have the share structure I used to have at Detour Gold. It's 200 million share. But imagine we already have 1.2 million ounces. We add another million ounces, and the market gives us, say, $100 US an ounce on a very good project located in town, in a brownfield situation. 200 million share or 2 million ounces, $100 an ounce, that's $200 million market cap. It's 4 times what it is today. So I think it is definitely a very good opportunity that I saw myself when I joined in 2019. And I'm very happy to be part of this team in which we're leading towards more discovery in the Yellowknife belt. And with this, I would like to give you the opportunity to ask questions. We're there to answer. John, yourself, and David. And thank you very much for your time.
Thank you, Gerald, for that overview. Please submit your questions in that little question box to the right, and we'll read them to Gerald and David. John, as we begin the Q&A, please begin.
Thanks, Bill. So, Gerald, maybe you can address, what's going on with Canada just in general, because I see, when you look at the world right now, you've got issues with Mexican government, you've got issues with the Peruvian elections. I think I'm getting a lot of feedback from clients that they're a little nervous about certain jurisdictions, right? And so we feel that Canada is a fantastic jurisdiction. You obviously built your success in Canada. Can you give us your feeling just in general about investing in Canada, today?
Well, I think, I can talk for a long time about what is the political risk of investing in different countries around the world. And to be honest, I mean, I've had a chance with Barrick to travel the world in many places, so I know a lot of different jurisdictions, and I can probably talk for the next 2 hours about that. Country by country. You have to realize that I probably set my foot on the ground, open pit and surface to so many more, maybe 300 different places in the world.
Wow.
And when I left Barrick in 2006, one of the most important things I said to myself after spending 12 years at Barrick was, I just want to be in Canada or in the US. That was it. Not even Mexico. Why is that? Because you need to learn the language of other countries. You need to speak Spanish if you want to be in South America. You need to be able to understand the people. You need to be there in person. As much I learned a little bit of Russian, I learned a little bit of different dialect in Africa. At the end of the day, my comfort level after starting Detour was I wanted to be in Canada or in the US. And this is where I feel comfortable. And for me, it's like I don't even invest in stock that are in Africa, for example, and I've been in Africa so many times. And I know that they can have spectacular discovery because it doesn't have the same level. Canada doesn't have, first of all, we have the glacier that eroded everything. And we have to deal with little outcropping or sometime. But we are doing it in an infrastructure that is very good legally, fiscally. Maybe not all the advantage, but at least Canada is not going to come back and seize your gold. Well, it can always happen, but as we know from the U.S. past, that it is. But it is a country that has infrastructures, that has geopolitical stability. It's got environmental we have to do, but everybody wants development. I can tell you, Detour was put in production from acquisition in 2007 at the IPO. And we poured the first gold exactly 6 years, 1 month later. So we were able to do this. And this is a big lifting. The mine cost $1.5 billion. I know I raised $2.6 billion over that 6 years period. I can tell you, and the project also took 26 months to build. So it took us 4 years to get it to the startup of deciding to build it and 26 months to build. Canada has this to offer you. So is the US. There's no question in my mind if you want to work in Nevada, invest in Nevada or Arizona or California, every state is different. Nevada is probably the favorite of all, but there's no way you can compare exploring in North America compared to the rest of the world with the risks that are inherent to your investment.
It's really helpful. Thanks a lot for sharing that. And my second question would be regarding slide 4, where we talked a little bit about the share structure, and you had talked about your experience at Detour and the shares outstanding here at Gold Terra. The website showing around 202 million fully diluted. Can you talk, or can Dave talk a little bit about anything there in terms of your shareholder base, in terms of the confidence level that you have in some of the asset managers or other, larger investors that you're aware of?
Well, if you allow me to very quickly, those warrants were issued before my time, because the one thing that I do not endorse, that I do not support in the financial world, is warrants. And basically, you're just adding dilution. People complain about stock option for employee to retain good talent. That's an important thing for us. Look, we have 6 million share in stock option. Okay, that could dilute by 3% the company.
Right.
I myself own 5.3 million share, and I don't have any stock options. And I put my money where I believe I can create value. So warrants, when you do a financing, basically you're saying, well, maybe the stock is going to be higher, and we're going to have a second financing, which is easier. In reality, people that have warrants, they'll sell the stock right away. They'll use the warrants. So that's one of the reasons I don't believe. If you look at when I did start Detour Gold, I was very lucky because it was a brand new vehicle, 40 million share. And there was very little warrants because we had 10% rolling ruling on our stock option issuance. I do not believe in warrants, and I'm sorry if people want warrants when you do a deal. I would never satisfy them because I don't believe in them. And these that are remaining from the past are at 60 cents Canadian, November 2021. Of course, I cannot not do press release until November 2021. I have to be honest. If we make a success discovery again this summer, we'll publicize it. And if the stock run up to 60 cents, these people would put money in the company, but then they'll be gone because I don't believe in them. And one important thing, when we're on that share page, what's very interesting that I'd like to show how much David and myself have worked the institutional side of the company over the last. Give you an example. When we did the flow through this year, 8 million share at 36 cents Canadian, there was one backer who took it. Mm-hmm. His name is right on top of the list. So we're bringing quality institutional investors into the story because they believe in what we're doing. If you look at our board, just the board that we have, it's already like almost better than the board I had at Detour. Just to give you an example, I have Louis Dion again on my board, mining engineer with 40 years of experience. We have a lawyer, Hélène Sevinovich. She was my corporate lawyer from the beginning, from the outside, our outside counsel. Laurie Gabouri, that was at Detour as well. Plus, of course, we have Stuart Roger, which was the founder of the company, Elif Levesque, which is a CPA. So we are looking at already be ready to transition into a developer one day once we have enough ounces. That's our goal. And we're already at 1.2, and I'm sure we're going to get more coming because I know the Yellowknife is already a small zone with a small resources. It's not public. So once we have enough drilling, we'll publicize it. But I tell you, we're drilling at the right place. We're on the Campbell Shear, and we're very fortunate. And that's what brought me in the company, was the Campbell Shear potential, because it has not been the focus over the last 7 years. It was left to us, David and I, to do it.
Thank you.
Okay, thank you, John. All right, Gerald, so you're in Canada and you've laid out why you like Canada, and viewer Eric asked, can you speak to First Nations relations? Because sometimes this is an issue that can come up in Canada.
No question. First Nations would basically have their say on any development project in Canada, no matter what you're doing. And at the end of the day, they want to see some benefit. And I see that one of the most important things about relationship and community engagement is your ESG, okay? Your environmental, social governance, engagement. So I'm going to tell you a little parenthesis just very quickly. So when I work in Africa, I built 2 mines in Tanzania, okay? So in Tanzania, when you are in a different country, I'm a guest. So you ask your host, so what can I do to help you? How can we do this so it helps you? As opposed to just be there to steal the commodity. I brought this same pattern because I never did with First Nation in Canada until I built Detour Gold and the Detour Lake mine. And we had to drill with 3 First Nations, sharing some land, and also the Métis as well. And we did all of this. We didn't have one barricade at Detour. We signed some benefit agreement, impact assessment benefit. And that's how you can approach it. Don't ignore all the stakeholders. Make sure you understand them, know them, and talk to them, and be receptive. You're not there to tell them how to do things. You're there to build a future together.
Gerald, would you have more issues with the Yellowknife City Council than you would with the First Nations group there outside the city of Yellowknife because of where you're located in such close proximity to the city?
I don't see a problem. You see, maybe if I was building a huge open pit like Malartic or Detour Lake, I think it would be, you want to move the town? Are you kidding me? No. This is a situation where we're after a high-grade deposit. It has a very small footprint. That's very important about. If you ask me, for example, would you do, Gerald, would you do another Detour Lake? I said, oof. It was heavy lifting. And I think that's one of the reasons my focus is more about high grade and better footprint or smaller footprint for the environment. And I don't think we would have an easy way if we were building an open pit south of the town. Malartic maybe was a different situation for Cisco. What I can tell you is we're there to work with people, but at the same time, the diamond mines are closing. Yellowknife is the gateway to service the diamond mines in Northwest Territory. Once those diamond mines are done, you could see a town going from 20, 25,000 down to 10, 5. So they need mining. They need more project in the Northwest Territory. The government is extremely supportive, and so the town will be. It's all a question of accommodating each other and talking with each other.
Okay.
And the coal mine already has a brownfield surface, so.
Okay, George, I'm going to get to your question, but a couple more follow-up questions from Eric. I sense that many investors find it hard to believe that Newmont and Miramar and others did not do additional exploration in the past. Can you speak to this again?
From what I know, because I wasn't there, but talking with Miramar officer that I know, and also from the Newmont, first of all, from Miramar point of view, gold was hitting the lows, 88, 98, 99, 250 golds. So basically, at the end of 2002, after not having success to find, and they shut down the mine, basically when gold price was around $300 an ounce. When they sold, when Miramar was purchased by Newmont by Miramar, not for Con, for Obey Belt, on which they spent $1.5 billion to advance the project. So Con Mine just became a reclamation site for them. And basically the site had become, now it's 98% reclaimed. There's no more building, no more shaft. The tailing has been covered. So it's 98% reclaimed. So it's a very, very property with a surface lease. And I think at the end of the day, if Yellowknife, I don't think Yellowknife, it's an industrial site. I don't think you want to build any houses or any park on an industrial site. So in my mind, I think Yellowknife will be very welcoming to see another mine grow up near town.
Gerald, Eric asked another follow-up question. Assuming a resource develops, do you envision using the Newmont existing site to build, or a new site adjacent to the Newmont lease, or other?
Time will tell. We're not there to know exactly what will come out. And I think this is maybe a tree-focused question on to the Yellowknife time, but I don't see any problem developing another mine in the future. Would it be on the current existing mine? I cannot answer that question yet.
Okay, Ronald asks, is there any concern for Gold Terra's operations becoming negatively associated with the arsenic waste in the giant mine?
Good question. First of all, the giant mine is a Canadian liability now because it's in the taxpayer. But you have to realize the giant mine also had a roaster, never was not looking forward to fix its problem while it was ongoing. So it was never fixed. And when you have 80% of sulfides, mainly arsenopyrite with arsenic, and you don't treat it and you don't recover it, it becomes a bit of a nightmare for the giant mine. And we have no intention of being associated with this liability at all. The coal mine, which was very nicely reclaimed, 98% of it, did a lot of work. And now the property is coming back to almost its natural state, except for some of the capping and the shaft. And but also the coal mine was not as refractory as the giant mine. So there's a distinction between those two deposits. Even below level 3100 or 1,000 meters below surface, the ore is free milling. So we know that this is not the case at depth, where some of the reserve are still.
Okay. George asked the question, have you got enough funding to complete drilling this year? When will you need to do another financing?
This is always the question about juniors and raising money and being able to do a lot of drilling. We are sitting at approximately $4 million in the bank, $2 million flow through, $2 million hard cash as our last statement of the financing that we did post. So we do have brought the cost of drilling in Yellowknife since David and I joined to roughly $200 a meters, all inclusive. So our 10,000 meters that we are scheduled to start in July is fully funded. Unfortunately, if we want to drill next winter, we will have to raise money before the end of the year. We never know when. We try to use the best window we can. Our goal is always to avoid dilution and get the best price we can.
Yep, and that's what George just wrote in. It's also a question of dilution, of course, which you just addressed.
Yeah. Well,
I'm sorry. Go ahead, Gerald.
We personally, I don't like dilution. That's why I don't like warrants or even stock option. As an example, I didn't took any, just to show you that I'm not there to take advantage of the company. And at the end of the day, we still have to raise money, and we're just hoping to do it in the best pricing situation we can.
Gerald, the holes that were released today, was this close to any other previously drilled holes, or was this more of a virgin territory? Could you expand further on that?
In general, the holes that we released today were somewhere between 50 to 150 meters from previous intersection. Some of them were this winter intersection. We felt that there was something there, and so we put another hole because the characteristic of gold mineralization. So when we know we're in the zone, it's because we have sericite, the sulfide, the quartz veining, and sometimes you get a gram over 10 meters, and sometimes you get 10 grams over 10 meters. Our compilation of the Campbell Shear on the Con mine, which is a 5 million ounces deposit, has exactly told us the same thing. You get 1 gram over 10 meters, you move 25, 50 meters, and you have 20 gram over 10 meters. These zones are stack zone along a huge corridor. When I say sometime actually at the Con mine, over 200 meters width of Campbell Shear, they had 26 stope, which means they had 26 zones. One drill hole will intersect 26 zones that they mined. But sometime 300 meters, 300 feet above, or 2 level above 400 feet, the zone was like just 3 zones. So it does vary along the Campbell shear. But if you ask me, are you in the right place with the Campbell shear? Are you disappointed with 1 gram over 10 meters? No, I'm not.
Would a disappointing phase 2 drilling result in the cancellation of this pursuit here, or have you seen enough to where you would issue and start a phase 3 even if phase 2 disappoints?
I'm quite confident that the phase 2 will generate better result than our phase 1. We went from 2 kilometers of strike length to focus on now about 400 to 500 meters strike length, and focus there to build the first zone. We may go back where we drilled last winter or this past winter, but you need to go where the best results are. So when I look at the 10,000 meters program, it's going to focus mainly on this. And if we're very successful, maybe we're going to keep drilling and not stop drilling and raise more money and just keep drilling. I would love to be able to be in a position to go and do 40, 50,000 meters of drilling next winter. That's our goal. And I think those results will show finally. Currently, the stock has been, treated as a junior, but this is a junior with a tremendous potential to build ounces. We already have 1.2 million ounces. With 1 million ounces of high grade, you can generate a lot of money when gold is $1,800 an ounce or more. It's quite spectacular, the margin profit on a high grade deposit, because high grade deposit is very hard to shut down, while a low grade deposit, when gold price drop, it's very hard. I know that for a fact.
Gerald, George asks, what grades do you need to make for depths of more than 1,000 meters? In other words, for it to be cost effective?
I can say, I'm going to give you 2 grade, okay? We use cutoff grade, okay? At $1,800 an ounce, okay, you have to realize that every gram is worth $60 per gram, okay? Underground mining operation in Canada that are not remote will cost you approximately $200 a ton. So your cutoff grade could be 3.5 grams for your cutoff grade. And your width for mineralization should always be 3 meters, maybe up to 5 meters, but anything which is basically. So a cutoff grade is kind of like a GT, gram times thickness. So if your cutoff grade is, say, 4 grams over 3 meters, then your cutoff grade should be 12. So you could have 12 grams over meters, or 4 grams over 3, or 3 grams over 4. So that roughly, because if a gram is worth $60 at $1,800, and you're mining 10 grams over 5 meters, like our Yellow X intersection, 10 grams is worth $600 a ton. And you're talking about $200 a ton to operate. Now you have to build a mine, but you're not building a Detour Lake again. You're building a small underground operation in town as well. So your benefit margin, even after building the mine, after operating at $200 a ton or more, it's something that I don't see a problem. There's definitely, like I said, the operating cutoff grade could be as low as 12.
Okay, and Gerald, last question here. Discuss the speed of drill permitting in Yellowknife relative to other jurisdictions within Canada.
We have an open permit to drill to all the land that we have under exploration or under our belt. So when you look at the 800 square kilometers and you ask me, could you drill anywhere? I can say, yes, we have a permit, a land use permit with the Mackenzie Valley Water Board to drill anywhere with characteristic on how much water we can take. And yes, if we we have no issue. But if we had land, then the process is about 3 months to get an extension of your land use permit in terms of the area you want to explore.
Excellent. Well, thank you. Kerry, as you come back on, David, just anything you'd like to further add in light of what we've spoken about?
No, I think everything's been very well covered. I just want to thank everybody for tuning in. I think the questions have been excellent. And, we're seeing a bit of a move here in the gold price again. Volatility reigns, and that creates opportunities for investors. So, again, thank you, everybody, for tuning in.
All right. And thank you all. A lot of you out there. Thank you for the excellent caliber of the questions. Bill and I have done a lot of these before, and these are by far the best questions that we've ever received. I would suggest that you all go check out the company's website, which is goldterracorp.com. That's GOLDTERRA corp.com. Make sure you sign up, get the latest notifications so you can follow along with the drill results as they're released. The tickers in the US, it's YGTFF. In Canada, YGT. Gerald, David, John, Bill, thank you all. And it was really informative. I've been following the company for a while and really learned some key information that will help form my investment decisions. So on that note, gentlemen, thank you so much, and hopefully we'll do it again soon. Take care.
Thank you.
I'm going to end the webinar now. And by the way, you'll get a link. So if you missed, if you came in late or had to leave for part of the webcast, you'll get a link. You'll be able to play it back. Don't hesitate to share it with your friends and associates if you think it has value. Again, thanks so much for being on, all of you. And let's see what happens to the gold price and the price of Gold Terra coming up. Take care. Bye. Mining stock wealth. When it comes to mining stocks, precious metals, and cryptos, you need to go to Mining Stock Wealth. Mining Stock Wealth.